Hi everyone, this is Dr. Nitin Choda and welcome to this important episode of Ignition Time. I have some breaking news for our viewers and subscribers, specifically those who've been on unemployment benefits. Remember, more than 40 million of our fellow Americans were on unemployment benefits at one point or another during the year 2020, and the $10,200 in federal tax exemptions on unemployment benefits earned during 2020 for households earning under $150,000 a year has now been amended by the IRS. There's been a new announcement from the IRS, and this is big news about unemployment benefits. Welcome to this channel. Welcome. My name is Dr. Nitin Choda with Ignition Time. This is breaking news, everyone, from Ignition Time. So here's the big news. Now, according to the original directive from the IRS, your unemployment benefits counted towards the $150,000 in household income. Well, now the IRS has actually expanded eligibility. This is great news, everyone. The IRS has expanded eligibility for those who essentially received unemployment benefits so that more people can now get the federal tax waiver. What do I mean by this? Let me show you this article on your screen that was published by CNBC, and as always, you'll get a link to this article in the description section below. The IRS makes more people eligible for the $10,200 unemployment tax break. So as everyone knows, and let me reiterate, the American Rescue Plan, what it did, everyone, what it did was it made the first $10,200 in unemployment benefits during the year 2020, essentially made it free from federal income taxes per person. So if you have a household making up to $150,000 a year and both spouses were receiving unemployment benefits. Now this is interesting because if both spouses received it, this would mean you would have $10,200 plus $10,200. Both the spouses would not pay federal income tax on $20,400 of unemployment benefits. But the unemployment benefits were going to be counted towards $150,000 in revenue. But now in this new revision from the IRS, this is the big news. The IRS now says that jobless benefits do not count towards $150,000 income threshold. So this is very interesting because what this does, folks, is this has new implications on who is able to take advantage of that. So basically the IRS issued new guidance. They just issued new guidance on the unemployment tax break. This makes more people eligible for the benefit. So what's the bottom line? Again, the American Rescue Plan waives federal income tax now on the first $10,200 of unemployment benefits collected last year in 2020 per person. Now, you may still have to pay state income taxes, so I want to be as clear as I can about that. Some states have decided to waive state income tax, but you'll have to get in touch with your state to find out if they are going to waive state income tax or if they are going to charge you, or if you have to pay state income tax on those unemployment benefits. But this new American Rescue Plan, initially when it was passed, it was assumed, or it was implied, I should say, that $10,200 in unemployment benefits, which by the way is traditionally considered income, which is why traditionally unemployment benefits are taxed, but there's nothing about the past 12 months that has been traditional. So essentially, unemployment benefits were subject to federal income tax. Then the American Rescue Plan had indicated that the first $10,200 would be tax-free. Now, until today, the IRS had indicated that taxpayers were supposed to, I say supposed to, not anymore, supposed to count unemployment benefits as part of their 2020 income in order to determine whether they qualify for the tax break. But in brand new guidance, everyone, that has been issued by the IRS, and what is interesting is I'll actually show you this guidance on your screen right now. And by the way, I'll provide you with a link to the IRS website as well. Here's the guidance from the IRS. This is brand new information, folks. You heard it first here on Ignition Time. So new exclusion of $10,200 of unemployment compensation. I'll provide you with a link to this in the description section below, so you can definitely check it out. But folks, here's the bottom line. The federal agency, the IRS, said in brand new guidance that workers can exclude jobless benefits from the calculation of adjusted gross income. So this is very interesting. So this rule now, here's what this means. So this rule change now means that more people will fall below the $150,000 adjusted gross income threshold, because now if you're not counting the $10,200, let's say for the husband and the wife, then more people will now fall under the $150,000. It's very interesting. According to Jeffrey Levine, who was quoted on CNBC, who's a certified financial planner, it definitely expands, meaning the eligibility. And this is a very generous interpretation of the legislation. So this is very interesting, folks. Now, let me give you all an actual example of how this actually works in the real world. So let's take the example of a married couple that are filing a joint tax return. And let's say they had job income, they had income through their job. Let's say one of the spouses was making money. And let's just say, again, this is an example. Let's say one of the spouses made $140,000 last year. And let's say that for whatever reason, they had $10,200 in unemployment benefits. So now what happens is, if they exceed the threshold of $150,000, if they exceeded the threshold, then this couple would not have qualified for the tax break at all, because the joint income would have exceeded $150,000, right? But now, if the $10,200 in this example of one of the spouses is not considered income, okay, is not considered income when calculating the adjusted gross income, which, by the way, is a new guideline from the IRS. So the new IRS calculation, or the new IRS guideline that was just issued, will actually make this couple eligible. So in this case, the income of the couple would be under $150,000, and that would mean that the $10,200, in this case, the couple would not pay tax on that. This is actually very interesting, because this would mean that more people again qualify. You could also potentially have a situation where both the couples are on unemployment, and somehow they had more adjusted gross income. Maybe they made money in the stock market, maybe they made money with GameStop, who knows, whatever. Maybe they made money in other ways. But now, if they were on unemployment benefits, let's take a new example of both the husband and the wife being on unemployment, and somehow getting more income from other sources, then in that case, this couple would not count the $10,200 for each of them. In other words, they would not count that income towards the adjusted gross income, and essentially get a federal tax exemption of the $10,200. So this new guidance is pretty incredible, and it just means that you don't have to consider your unemployment benefits towards your adjusted gross income, which now makes more people eligible to take advantage of the federal tax waiver, because more people will now fall under the $150,000 income threshold, because you don't have to count it as income anymore. So folks, this is the breaking news. This is the new update that I think is going to be very, very beneficial for many of our fellow Americans. This was the big news. Now, if you and let's say a member of your family has been receiving unemployment benefits and you had no other sources of income, and there's absolutely no way your income comes close to the $150,000, I get it. But this definitely is big news, because this will expand eligibility for unemployment benefits. Hopefully you learned something new. Please click the like button. Please subscribe. Please enable notifications. If you know someone who can benefit from this video, let's say someone made income from other sources, but they were still on unemployment, and their adjusted gross income could be close to or above 150, that those types of individuals do exist, then share this video with them so that they understand what they need to do when they file their tax returns. Thank you so much. I appreciate you. I'll also provide you with a link to the IRS guidance. Let me show you the guidance officially from the IRS website on your screen one more time. So folks, this is the IRS website. This is brand new guidance from the IRS that just emerged today. This is brand new information. I hope you learned something new, everybody. Thank you so much for watching. I appreciate you. I work very hard on this channel. All I ask is you please click the like button, please subscribe, please enable notifications. That would mean a lot to me personally, and that also helps out the YouTube algorithm. Thank you so much for watching. I appreciate you. I'm looking forward to seeing you in the next episode of Ignition Time. Take care. Bye.